Only one day separates us from probably the most important, maybe the second most important date for Tesla in 2025. Second most important because the robotaxi launch in June might have been the most important. But the shareholder meeting, the annual shareholder meeting of Tesla, is scheduled for tomorrow, Thursday, November 6th. And this shareholder meeting has one important item that we, of course, are all very aware of, which is Elon Musk's compensation package. The $1 trillion compensation package that Elon will get in totality at the moment where he generates roughly $8.5 trillion in market cap, or another 7 trillion up from now. In percent, that's roughly 600% up, roughly. And all of us should be very happy to give Elon this compensation package in return for giving us a 600% up move of the stock. In other words, would you give someone 15% if they generate you 600%? And the answer is probably yes. So it's a no-brainer. I want to talk today very briefly about my strategy, how I tackle that whole situation, and what my trading strategy is, of course, for that all-decisive moment. So in order to comment on this, I know a lot of people have that question. Yes, will that package really pass? And if it passes, what does it mean for the stock on Friday and going forward for Q4? And also, are there any other surprises hidden in that meeting? And what does it all mean for us as shareholders? Number one, it is very clear at this point for me, I said it before, but it's very clear to me that the odds that this package will pass are 99.98% roughly. And the reason for that is we know that the last round we had a similar package and had to vote for it. Last year, it passed at 73% roughly, 50% needed this time, huge margin. And on top of it, Elon can actually vote this time, and also Kimball. And the two Musks together have roughly 15% of Tesla. So that gets on top of it. So my estimate is we are ending up at probably 85% yes, maybe even a little more. It will be an overwhelming yes. And the market already knows it and prices it in. Why am I showing you this chart here? Let's start with the macro situation to anticipate what exactly we want to do with Tesla stock. Here we see the NASDAQ. As you know, yesterday on Tuesday, we had a huge drop for no reason. There was basically the market saying we don't like Palantir earnings, even though they were absolutely breathtakingly amazing, but not as breathtakingly amazing as the stock is breathtakingly high and the PE and forward PE and everything. So the market decided to sell off Palantir, and together with Palantir, the entire NASDAQ and all the tech stocks, including Tesla, went down a lot. 2% for the NASDAQ, over 4% for Tesla and all the other guys. So now the question is, starting with the macro, are we going into some bear market, into a correction in November, or what is the situation? And let's start there to assess what we think about the market. Now, Fundstrat and Tom Lee and his technical analyst, who I think are great people, they said we are setting up for a perfect year-end rally, where we might even end up at 7,500 for the S&P, which is pretty significant. If you look at the S&P, we had 6,800. So if this thing goes up to 7,500, that's another 10% in the market. Basically, they're projecting for year end, right? That's not a long time because there's only 7 weeks left. So big rally setting up, in their opinion. I share that opinion for many reasons. Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. The Fed is stopping, quantitative tightening, going into quantitative easing on December 1st. They have lowered the rates. They will very likely lower the rates again. We know the unemployment is going through the roof, which forces the Fed to act. I will have a different video on that. So that looks all very bullish. And the one caveat is that Fundstrat said we might see a mini correction right now. They said this before yesterday. So I do think on a short week time span from now to end of next week, there is a micro seasonal correction pushed, back from September, October, where I predicted there's a 50% chance of it happening, and it didn't happen. So I think we are setting up for potentially some rotation out of tech that could go deeper than what we have seen, maybe another 5% down or something for the market, which would mean another 10% down for Tesla, another 40 or something. So that is in the cards. I think if anything, it's in the cards now. And if it doesn't happen now, it will blur into the rally and not really happen. So I think Fundstrat is a little bit on the money. I think we're setting up for a rally. And if the market goes to 7,500, Tesla will end up over 500 this year. That's pretty safe to say, even without any specific catalyst. Okay, that's my big picture. If we go to Tesla, we already see it's recovering today. No surprise. What am I going to do with Tesla? And the key question is, now that we understand the market a little bit, we understand Tesla could fall another 40 points or something if the market decides to tank, which is absolutely not a guarantee, of course. Could happen in the next week, in my opinion. I think on the bottom level, we see 410 for Tesla. If that happens, not because Tesla does anything, but 410 is for me still the bottom of the channel. And on the top, I said 460. I'm going to raise this a little bit now with this thing coming up. The way I observed the Tesla movement was very simple. We have seen here, if you go to 6 months since this big run up in September, since September 16th, we are basically in a channel that started here at you could say 410 roughly, September 15th, and stayed in this channel all the way to now, between 460 and 410, the tendency up. If you ask the question, Joe, what's going to happen? We have that meeting tomorrow. Will the stock go up or down after the meeting? Now we have to put this into two pieces, two phases, that prediction. The first prediction is there anything going to happen that's very special in this meeting? Yes, we will see an approval of Tesla's pay package for Elon, which will initiate the next 10 years, maybe the next 5 years, then he will probably get it. But the next 5 to 10 years of Tesla's path to sustainable abundance, it's the strategic buy-in into the real next strategic phase, sustainable abundance phase of Tesla, and getting Elon on board. So it is a very big deal, and it's gonna happen, and it's pretty much guaranteed. The problem is it's priced in, because everyone knows it at this point, because everyone watches my channel and everyone looks at Kalshi and the betting market. So it's pretty clear it's going to happen. It's priced in, right? So if something is priced in, there is a sell the news risk. So everyone knows it. The stock rallies up into the shareholder meeting, and then, okay, everything happens as we expected. Boom, sell the stock, because now there's no news. Is that a risk? When we assess the sell the news risk for any event, you can't, of course, look at that risk in isolation. The question is, do we have a big run up into the event? Here's how I see it. As I elaborated, I think we are in a channel from 410 to 460, maybe 470. That's like the channel we are in. The higher up we are on the top end of the channel, the more likely a sell-off is. The more we are at the bottom, the more likely a run up after the event is. So all these sell the news things are basically just a reversion to the mean, because you ran up too much. If you don't run up too much into an event, there's also not a sell the news effect. And so now we have to assess, will there be a sell the news effect? I think it depends on today and tomorrow. If that stock goes up at 460 tomorrow or 470, I would be a little cautious and would expect a slight sell-off. If you're staying here or below, I would be very unconcerned about a sell-off. Of course, it can still sell off 10, 15 bucks, but no one cares about that. Okay, that is my take. What am I doing? Well, first of all, I did actually some very good trading yesterday, on Monday, when Tesla went up like crazy. I sold some 490 calls, not many, but some nice little money on the side, because I thought, this is a little overdone here. I'm sure we are reverting back. So I have still some 490 calls, made basically 80-90% on them. Depending what happens tomorrow, I might sell them. If we run up too much, if you run up into 460, 470, I will sell them, close them, buy them, because I don't want to hold this position, and I already made most of the money. There is no reason to keep that risk. On the short put side, actually I'm a little more risk on that side. I have 435 and 425 short puts. I will keep them. I will keep them through the event, but I do not recommend anything here, and I honestly don't recommend you doing that. That's like you're running definitely risk of potentially getting creamed a little bit. The reason I have these 435 and 425 short puts, so basically betting that Tesla will not fall below 435, and especially not below 425 on Friday after the event, is because I see this channel. My bet is, well, either it goes down from here, then it's not likely to go even more down, or it goes up, then it's more likely to sell off, but not all the way to 435. So I think 435 is taking some risks. I would definitely not recommend that. I will still hold them because I'm playing a longer game here. If it falls below 435, I think it becomes an incredibly buy the dip situation. And I'm willing to take some risk here to lose a little bit on these. I mean, I'm much more likely to win than lose, but I'm much more likely to lose on the 435 puts than on the 490 calls, by the way. I still don't want to hold the 490 calls through the event. So that's what I'm doing, just to give you a little bit of an idea. So I'm basically putting in my channel, I'm saying I'm betting on Tesla not falling below 435, especially not below 425 by Friday. And I'm also betting on it not going above 490. In other words, I think not much will happen, at least not this week. If there's any risk here that I'm really wrong, it is that there's upside risk. I do not think there's huge downside risk. I do not think we can fall below 400, but I think the risk that we go above 500 is much greater than falling below 400, because maybe Elon pulled some rabbit out of the hat. Even though we know that shareholder meetings are not usually the thing where you do that, right? Shareholder meetings are kind of a dry operation where you vote on all the things and that's it. There's no great demo. We know there is no Optimus demo coming, at least nothing serious. So that's my take. I think from a $440 to $450 per share price point, it's a no event. Nothing big is going to happen. The more we go away from 445, which is the center point here, the more likely something is going to happen. If you go too high, it's a sell-off. If you go way below, which we probably won't, it's going to be a run after the event. So that's my take. This is a very tactical video in a very strategic time, but I think you guys deserve to have at least my perspective on how I play this whole situation. I will want to wrap up with a little victory round here for the Tesla community. Congratulations to everyone, Alexandra and the whole crowd that made that happen. The vote on Thursday includes a lot of ETF, exchange traded funds that are managed by third parties. And these third parties often follow proxy advisors, which are these horrible people, or as Elon puts it, corporate terrorists. Elon calls them corporate terrorists because their job is to spread terror and destruction, in Elon's opinion. And I think Elon is not wrong. Glass Lewis and ISS. And they recommended to vote against your own interests. Vote against Elon's pay package, where everyone, without exception, understands that a vote against that would drop the stock 10, 20, 30%. So it's like an insane recommendation. Also, you alienate Elon Musk, who's very important in what's to come. And one of these organizations that said, yeah, sure, we are going to follow the proxy advisor corporate terrorists in their recommendations was Charles Schwab. So Charles Schwab, they have trading platforms, but they're also managing ETFs. They represent roughly 0.56% of the Tesla total outstanding shares in their ETFs. And they wanted to vote for these corporate terrorist people, which is like insane. Like, how can you do that? Even BlackRock and Vanguard and all these guys said, dudes, no, we are not just going to vote with these people. We leave it up to our shareholders in our funds, right? They opened up an option for anyone who holds shares in their funds to actually do an election if they want Vanguard or BlackRock to vote alongside these proxy people, the terrorist people, or alongside the board of the companies, which probably has more interest in the company surviving. And so there was a complete hate storm in a good way on X and beyond X, organized by the Tesla community against Charles Schwab, right? Remove your shares, cancel Charles Schwab, and destroy these people because they are completely being irresponsible and destroying us. So here was basically called by Alexandra, time to move out of Charles Schwab. She explains the whole thing, and it was a very big deal, right? And the big news is that yesterday Charles Schwab caved and said, oops, we appreciate your patience and understanding as we await the conclusion of the voting process for the Tesla shareholder meeting being held later this week. Schwab Asset Management's approach to voting on proxy matters is thorough and deliberate. Well, I hope so. Now it is, after everyone threatens to cancel you guys. We utilize a structured process that focuses on protecting and promoting shareholder value. Do you? Well, now you do. Yes, not a structured process, by the way. You're doing the wrong thing. Wait until X is completely outraged and half of your user base and customer base says, dudes, are you nuts? We're going to leave. And then you cave and turn around and say, oops, we are going to change the vote. That is not a structured process. This is a chaotic process. A structured process would have done that before everyone threatens to leave you, just for the record. So we apply our own internal guidelines, aka we wait until there's a shitstorm on X. That's our internal guideline. And then we do whatever our people threaten to us and want us to do. And do not rely solely on recommendations from Glass, Lewis, or ISS. Not anymore. In accordance with this process, it's very funny. It's very Dilbert irony here. In accordance with this amazing process of waiting until the shitstorm hits us, Schwab Asset Management intends to vote in favor of the 2025 CEO Awards Performance Award proposal. We firmly believe that supporting this proposal aligns both management and shareholder interests, Elon and ours, ensuring the best outcome for all parties involved. Okay, before I bash Schwab even more, they did the right thing in the end. They tried to do something terrible. They got huge pushback and threats from their customer base that everyone is going to run away, and they caved in the end and do now the right thing. Why is this important? It shows you the power of the Tesla shareholder base. It shows you the corruption and moronic structures, because a lot of that is not even in the interest of Charles Schwab and all the other guys. They're just doing it because they don't think. They do not have internal processes that are worth anything when it comes to that. They do not think, they do not care. Now we had huge outrage because people say, dudes, you cannot take my money, manage the money, and do stupid things that are actually recommended by destructive forces like Glass, Lewis, and ISS, who are under investigation by multiple attorney generals for like basic corporate terrorist behavior. So you can't do that. And it shows you that it matters that we care. It matters that we get organized on X. It matters that we as Tesla shareholders learn from that whole process through Tesla and hopefully apply this whole knowledge and process to more than Tesla, to more stocks, and start asking questions. Who's managing our money? Who is the so-called, accountability layer for the capital system that we're living in? Who provides this fiduciary duty stuff? And the deeper you dig into that, the more it's a total insane joke. No one paid attention, right? Was like the inmates run the asylum or something. Why do people like Glass, Lewis, and ISIS are even allowed to exist? They need to go. These people are highly dangerous and deluded and crazy people. Look at their websites, what they want. Like, oh, your board doesn't have enough women. We vote against Elon. Oh, your board is not diverse enough. We vote against Elon. Oh, Tesla is bad for global warming. That's the other thing. So they have a bunch of complete crazy things on their websites, and they need to go. They're leftovers from a dark, dark time that we, thankfully concluded now. I find this all very impressive. I find it great that we got organized. The whole X community and Tesla community does that. Tesla, again, shows it's the shining beacon on the hill in the giant, giant sea of stocks and retail shareholders, because the Tesla community is the most engaged and the biggest shareholder community in the world, the biggest retail shareholder community of any stock. These things are important because they tell us, they teach us about the structures of capitalism, of governance and oversight, and reveals all these bad things from the Delaware scandal to the Glass Lewis ISS scandal, and how the Tesla community cleans up the corruption and the swamp in not just in politics, but where it matters most, in money management. So thank you if you participated in that. Thanks for watching. Thanks for being part of this amazing journey. Tomorrow will be very exciting. I hope that was helpful. See you very soon.